Bowman here with your commentary on the sterling US dollar. Now this is a trade that has just popped up and it looks like it will be beneficial for next week, or this week coming for the 14th of February. Now if I go to the monthly, we see that it's basically in a process of a shooting star, which usually is a reversal candle at the end of a run. But needs to follow through on the next month with a bear candle to confirm. So let's just go to the weekly, and the weekly here, it basically stalled out right on the top of the wedge, which was expected. Otherwise, a break of that would have sent it to a higher target. It would have been capped off by this downwards trend line there. So that's also a sort of a bearish signal that it did stall at that area. And let's just go to the daily. Now on the daily we have a break, and that break gives me a target of parity 57.78 to parity 57.08. I would pretty much say that the first target is more relevant, and you could see it stall at basically parity 58.35 area. Now this still gives us an estimate of roughly about 200 points from where it is now. Your average true range is 118, so it's kind of like a 2-to-1 ratio. But I would just consider this to retrace itself a little bit, and then follow through on a bearish resumption. So let's have a look at the Hawkeye. Hawkeye is green, meaning sell. It's been green for the last 4 or 5 days, but now it's really confirmed that we've got a target out of a break, and that's the most important thing. So now let's just go to the intraday just to get some more inside confirmation. Now with the intraday sterling US dollar, we see here the 4-hour graph is that it is in the downwards channel line, and sort of the top of that channel is the 160.62 mark. Right now, if I was to say go to my daily, the 160.62 mark is roughly around this area here, so you could expect a retracement, but basically what I like to see is when a break happens, and the following candle you get in with a stop loss of your average true range or your previous high inside the channel line. So basically this looks like it's all go. You could say to yourself, alright, let me put an order in to open at say the 160.62 level for a retracement on the 4-hourly. That will give you sort of more points up your sleeve. It's a 2-to-1 ratio as it is now, so it's not the worst, not also the best, but it still looks like there's cash on the table here. So that's a trade for next week to keep your eye on. Also, I wanted to add the Australian dollar. Now, to me, it looks like the Australian dollar will weaken further, and this is because it retested the sort of upwards channel or upwards trend line at the sort of 102 area on its previous high, and it's come off. But not only that, when I bring up the Australian CAD, it looks like the Australian CAD sort of broken on last Friday, and looks like the CAD will be getting stronger against Australian. So therefore it says to me, okay, well, the US dollar is predicted to go up, and the Canadian is getting stronger against the Australian dollar. So it looks like the Australian dollar will be going south, more south. But the only thing I don't have with the Australian dollar is a target, so I'll just be waiting for that pattern to form. This is Jay Bowman signing out, jaysanalysis@hotmail.com.